This video is going to be about the best insurance policy you can ever buy. But I want you to know it's also probably the most misunderstood and the most vilified insurance policy out there. And some people think of it even as being worse than life insurance. But I want you to know it's not, and that's what we're going to cover in this video today. And the insurance policy I'm talking about is PMI, or private mortgage insurance. Private mortgage insurance is required on conventional loans with less than 20% down, as Fannie Mae and Freddie Mac, who we sell these loans to, requires that they have a risk partner on your loan. And that risk partner is the private mortgage insurance company. And so they help insure the loan for us as a lender and for Fannie Mae and Freddie Mac. But you as the borrower pay the premiums, okay? And so, but I want to show you that, that it can be really affordable. It used to be till 3-4 years ago, even PMI could be pretty darn expensive. But now if you have great credit score, especially over 760, I've seen the mortgage insurance, it seems to be just dirt cheap to me from having been in this business so long. Like on a $400,000 loan and you have a 760 plus FICO score, I've seen mortgage insurance premium payments as low as $100 a month. And what's amazing, let's say you're buying a $425,000 house. If you put 20% down, that's $85,000. But 5% down is only $21,000. So this insurance policy that costs you $100 a month possibly, and maybe more, it could be $150, $200, we can't say until later, till we talk, okay? But you're paying $100 a month potentially to save $64,000 at closing to buy your first home. That is amazing to me that we can do that. And so how many of you think that's a great deal? If you don't like that, if you don't like saving that much money, then just honestly stop watching this video. But for everyone else, let's talk about this a little bit more. Now, for everyone else continuing to watch this video, I want to give you some secrets about private mortgage insurance, okay? On a conventional loan, you can eliminate that payment, and you could potentially do it in as soon as 2 years if you've made all your payments on time. And what you would do is call the loan servicing company you're making your mortgage payments to. You would call them and ask them to have an appraiser come look at your home and complete an appraisal. You'll have to pay for that, but if the appraiser says your home's value is X and now your loan to value is 75% or less, not 80, but 75% or less, you can ask your loan servicer to delete the mortgage insurance payment on your loan. So in my example, let's say you had great credit and your mortgage insurance cost just $100 a month. You paid it for 24 months. You paid $2,400 extra, but you saved $64,000 at closing. That sounds like a flippin' screaming deal to me. So this is why I love mortgage insurance so much for my buyers. Now let's say your home doesn't go up that much in value in the first couple of years, okay? There's a second rule that comes into play with private mortgage insurance, and that is once your loan, after 5 years of on-time payments, once your loan to value is less than 80%, then you can ask for the private mortgage insurance to be removed from your payment. And with 5 years of amortization of your principal balance dropping at today's interest rates, your home only needs to go up a little over 1% a year in value for those 5 years for you to be able to delete that mortgage insurance premium. So let's say you had to pay it for 5 years, God forbid, and you had to pay, 60 payments at $100 a month, that's $6,000. Even if you had to pay $200 a month and pay $12,000, you still saved $64,000 at closing when you bought your home because you only put 5% down instead of 20. Next, I'm going to share with you a second secret, but please, like and subscribe to my page and share it with other people, because I'm sure this video especially is going to really surprise people and shock people, and they need to see it. Okay, Second thing I want to cover for you that most people don't really think about at all is the reality of how fast home prices in Denver have been increasing for the last 10 years, okay? And know this, that as home values go up, if you're trying to save for a 20% down payment to avoid the dreaded PMI, well, that your percentage down payment, the percentage stays the same, but the dollar amount continues to rise quickly. So let's say at the $425 price point, 5% down was $21,000, and you're like, no, I don't want to pay PMI, okay? Well, to get to that $85,000 number, okay, how many years is it going to take for you to get there? You know, let's say, for example, you know, I can save an additional $10,000 a year. Well, according to Case-Shiller report that just came out earlier this week for the month from June 2020 to June 21, Denver home prices appreciated by 20%. So that $425 home, a year from now, maybe $510. Now your down payment required for 20% down is over $100,000. Not $85, it's over $100. So you saved $10,000, but you went backwards. The home that you could have bought at $425 is now $510. So you're going backwards, and that happens to so many buyers, and I don't want that to happen to you. That's why I always tell my clients, buy as soon as you can, because home values are soaring. And almost no one can save money as fast as home values are rising in Denver. I mean, even if we go back to our average, okay, Case-Shiller says our average in Denver home prices appreciate 5% a year on average. So at a price of $425 today, 5%, so you know, $21,000. If you can't save at least that much or more, you should be buying a home right now, because you're going backwards. And I don't want you to be going backwards. Take advantage, you know, the small down payments and the mortgage insurance policy to get into a home today and start building wealth for yourself. Quit paying your landlord's mortgage. Pay your own damn mortgage instead, and start building wealth for yourself and your family using mortgage insurance. And to me, it's honestly the best mortgage insurance policy out there, because A, saves you a ton of money up front, B, helps you make money. I know of no other insurance policy that will ever do that. That saves you money up front and helps you build wealth at the same time. So if you liked this video, please, you know, subscribe to my page, share it with others, because I'm sure you're a little surprised by all this. You know what? Share it with your friends. Share it with your family and coworkers, because I bet they're going to be shocked as well of how great a mortgage insurance policy is.